Rocket Lab is up 578% in the last year, and stockholders are asking themselves, can this continue? Rocket Lab's Electron rocket has flown more than 60 times, making it the #2 most launched US rocket behind SpaceX. They've got $400 million plus in revenue, a new national security angle with their GEOST acquisition, and a Neutron rocket aiming for its first flight this year. But here's the part that nobody is talking about. Their vertical integration strategy could quietly turn Rocket Lab from just a launch company into an aerospace powerhouse. My name is Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor, which means I'm not here to sell you some glossy brochure promising a safe retirement income. I don't do hype. I break down the numbers so retail investors can make smarter, more confident decisions. And if you've been wondering whether Rocket Lab is just hype or the real deal, stick with me to the end. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/ricko to get your 10 stock picks right now. Rocket Lab is an aerospace company that specializes in small satellite launches and spacecraft hardware. Its most recognizable product is the Electron rocket, a partially reusable vehicle designed to deliver satellites of up to 300 kilograms into orbit. Electron is powered by the Rutherford engine, one of the first 3D printed, battery-operated engines to fly into space. Since its debut, the rocket has flown more than 60 times, giving Rocket Lab the title of the second most launched US rocket after SpaceX's Falcon 9. Quick takeaway, this isn't some startup hoping for a first flight. Rocket Lab already has a proven track record. The company is also developing a larger vehicle called Neutron, aimed at the medium lift market. Neutron is designed for full reusability from the start. It features landing legs and a hinged fairing that stays attached, which should allow for faster turnaround between launches. Management has marked this year, 2025, for the rocket's first flight, though the timeline leaves little room for setbacks. And this begs the question, can Rocket Lab actually pull off Neutron on schedule, or is this just going to be another aerospace delay story? Rocket Lab's operations are split into 2 segments. Launch services, which cover the actual rockets and mission management, and space systems that include spacecraft platforms, satellite components, and mission software. Together, they allow Rocket Lab to offer a complete end-to-end service, build the spacecraft, launch it, and manage the mission. And that's vertical integration in action, and it's a big clue to where this company wants to go. So why has Rocket Lab's stock exploded so much over the past year? Well, in my last video, I covered Rocket Lab's recent partnership with the US Air Force to support the Neutron campaign. But there have been some new developments backing this growth. On August 12th, the company finalized its acquisition of GEOST, a defense contractor specializing in electro-optical and infrared payloads. These systems are used for missile tracking and space domain awareness. The deal broadens Rocket Lab's reach in national security markets and pushes it further into the role of a defense technology provider, not just a launch company. And this shift, well, towards defense is massive. Government contracts, they're sticky, multi-year, and they pay incredibly well. At the same time, analysts have upgraded the stock following strong revenue growth and expanding margins. And these upgrades reflect optimism that Rocket Lab's growth strategy is gaining traction. Analysts at Needham, KeyCorp, and Cantor Fitzgerald all raised their price targets after the company's latest earnings, some as high as $55 per share. And when Wall Street analysts start competing to raise targets, you know sentiment has flipped. Electron continues to hold its position in the small launch market. And while competitors like Astra and Firefly have struggled to deliver reliable vehicles, Electron has established itself as a dependable workhorse. Industry data shows that Rocket Lab has launched more small satellites than any other company in recent years, cementing its lead in this segment. So, you could say that Rocket Lab quietly became the SpaceX of small satellites, and most retail investors haven't noticed. This growth is evident by looking at their stock price. By the way, if you want to follow along, just scan this QR code. Rocket Lab stock trades around $47 and it's up 578% from 1 year ago. Speaking of which, over the last 52 weeks, the stock has traded in a range between $5.74 and $53.44. And that means two things: massive upside momentum, but also real volatility risk. But here's the big question. Does Rocket Lab's rising stock price mean now is the time to buy? Well, the company's fundamentals do show signs of progress, but profitability could still be a few years away. For fiscal 2024, revenue did increase 78% year over year to $436 million, and net losses also rose slightly, up 4% to $190.2 million. Still negative, but the slower pace of loss growth is a very encouraging sign. So revenue, it's compounding fast, but there's still bleeding cash. Now, if we do zoom in a little, quarterly results do show the same trend. In Q2, revenue rose around 36% from the same quarter last year, a sign of progress. The company also closed the quarter with a net loss of $66 million or 13 cents per share, and that missed expectations of 9 cents. Missing expectations stings, and it reminds us that Wall Street is watching every quarter closely. And because the company is still operating at a loss, their PE, well, it's still zero. Rocket Lab's debt-to-equity ratio is about 0.61, and its current ratio is 1.79. Debt to equity tells you if a company relies on borrowing to survive. And when their debt equity is high, like approaching a value of 2, it means they borrow a lot, and it could be problematic for them to pay investors back or even profit. If it's relatively low, say less than 1, it could also mean safe, but also tells you that the company is not taking advantage of leverage for growth. Rocket Lab's debt-to-equity level suggests that it has enough liquidity for near-term obligations, putting them in a very good position. Translation, they're not drowning in debt, and that buys them time to execute on their goals. So why should investors be excited about Rocket Lab today? Well, the answer is simple: total market domination. Rocket Lab has been moving like moss, right? Slowly expanding their capabilities from end-to-end aerospace services to fully serving the needs of any aerospace endeavor. From the software to parts production to security, they want to own the entire process. And here are some of the things on the horizon that's coming up for Rocket Lab. Well, Neutron, for example, that's their new reusable rocket for interplanetary missions, the next generation of aerospace engineering. Imagine the paperboy upgrading from a BMX to a full-on 18-wheeler. It offers a lower cost per kilogram of payload and a faster turnaround time for applications like deep space missions and constellation deployment. And this gives Rocket Lab the ability to take on large constellation research, as well as access to contracts for national security missions that could run for years on end. If Neutron succeeds, Rocket Lab suddenly graduates from a small launcher to a serious SpaceX competitor. Then we have HASTE, which stands for Hypersonic Accelerator Suborbital Test Electron. And this is Rocket Lab's test track to further hypersonic research, which is just a fancy way of saying high-speed flight experiments. And this expands the business way beyond satellites and stretches its reach to encompass national security and defense systems. Defense programs globally constantly require testing to keep their security systems sharp, and that means opportunity for Rocket Lab to have repeat business and long-term contracts from a slew of companies. For investors, this adds a second stream of revenue that comes with a higher potential of profit. Think of HASTE as Rocket Lab's defense Trojan horse. small tests that lead to big contracts. And if that's not all, Rocket Lab doesn't even want to just be able to fly the cargo, they want to make the cargo. Think solar panels, navigation technology, and even full satellites. The whole space system. Rocket Lab wants to be the baker who owns their bakery and own the farm where they get their wheat from. They essentially want to control everything in order to minimize miscommunications and delays, and this also means more money moving away from the middleman. For investors, this means a potential much bigger share of the budget on every mission. And don't forget, Rocket Lab's recent acquisition of GEOST, well, it was only part of their vertical integration strategy. By buying key companies crucial to the success of space travel, well, they're able to capture more value per mission. Owning the technology streamlines their supply chain and improves gross margin, which also helps quality control and project management. This operating advantage helps them win over the hearts of major government agencies, but also creates a lasting demand among firms in science, security, and space exploration. So the big idea here, well, Rocket Lab is building a moat not just through size, but through owning the entire value chain. Now, let's be real, it's not all sunshine and rocket launches here at Rocket Lab. The Neutron project should help propel human quest for deep space discovery and interplanetary research. But it's an incredibly difficult goal to undertake, let alone by their target date of this year, yes, 2025. With the colder months just around the corner, this is a tight deadline for the aerospace company, and it feels to me like they have no margin for error. Space is hard, and things happen, especially in aerospace. If key tests slip, this can damage their reputation and limit their partnerships with big-name contractors and especially government agencies. And it's important to know that being approved for national security contracts only makes Rocket Lab eligible, not guaranteed to get an order. They'll need a successful test flight if they want that door opened. In aerospace, missing a milestone isn't just a delay, it can kill contracts. Now, if it seems like that door is closing on Rocket Lab, well, it seems to me like Rocket Lab is doing everything in their power to kick it down. Now, the company is still burning quite a lot of cash despite showing record revenue in 2025. And don't forget, Rocket Lab has also been able to raise cash through equity financing. However, this spending allows for Rocket Lab's vertical integration, effectively solidifying their supply chain and allowing them to scale up operations at a faster rate. So yes, dilution hurts a little, but it's fueling a much bigger long-term play. So here's my verdict here. I think Rocket Lab investors have a lot to look forward. Electron provides a solid foundation for revenue generation, and Neutron is poised to propel the company significantly forward in the aerospace sector, with its scaling up and expansion rates being truly impressive. They're poised to be the premier solution for government and commercial missions. However, that flight will likely face a little turbulence. The Neutron timeline has been consistently pushed back, making some investors shaky, especially given its increased capex. I think Rocket Lab has some real momentum, but I would rate Rocket Lab a cautious buy. I would probably wait to see how Neutron's test launch goes before buying personally, but I'd probably be kicking myself for not buying more sooner. Bottom line, Rocket Lab, I think, is a high-risk, high-reward bet, and for the next 12 months, well, it's going to decide if they can graduate from potential to powerhouse. But what do you think about Rocket Lab? Are you buying into their exciting vision for the remainder of 2025? Let me know in the comments below. And while you're there, if you found this video helpful, do like and subscribe so others will find it as well. Thank you so much for watching, and I'll see you next time.